Nifty, and we have Titan, which is a buy rating with a target price of 4,300.
All right, Mangalam, thanks very much for that. The market opening rates are on your screen. It's absolutely flat. I mean, 10 points lower on the Nifty is what we have. We are at 22,440. Okay, now 20 points lower. 435-ish is where the open is coming in at. There you go. On your screen, the Nifty Bank is down about a quarter. That's a 100-point cut, 47,470. Mid-cap index, which ended up almost 2% higher, starts a 0.25% up. And of course, the big winner yesterday was the small-cap index, which by close was up 3%. The small-cap index is in the green, but barely so. So it's not a bad open at all. I mean, way better than what the GIFT Nifty, etc. were indicating early on. So we're down about 25 at the word go on the Nifty. But Sonia's got more rates. Sonia.
Well, thanks a lot for that. I'm going to take it straight to the top gainers right now. So Bajaj Auto has been the top gainer this morning, up almost about 1.5%. In case you missed out on it, very strong numbers coming through in the month of March. Total sales growth of 25% is what Bajaj Auto clocked in. Let's move to Ashok Leyland. There has been weakness in the commercial vehicle sector, as is well documented. So Ashok Leyland not doing that well this morning. Absolutely flat. The March sales are down 4%. Medium and heavy commercial vehicle sales are down about 7%. Hero MotoCorp is the other one. Compared to its peer set, Hero MotoCorp has underperformed this time. So has the stock, down almost about 0.3%. Total sales down 5.6% in the month of March. TVS Motor looking pretty good over there. So total sales growth of 12% is what we've seen for TVS Motor. And that stock is up about 0.7%. Let's take it to Reliance Industries because, you know, as Rima was telling us, Jio's numbers were looking very strong in the month of January. They added almost 42 lakh users in the month of January. And that is a very strong subscriber addition. So Reliance in focus. Apart from that, CSB Bank in focus. Strong deposit growth is what we've seen, 4.5% higher there. Robust growth in the gold loan business for CSB Bank, so looking pretty good. IRDA is the other one, very strong loan growth this time, up almost about 27%. And the stock is charging ahead, almost a 5% rally is what we're seeing right now. Moving straight to some brokerage reports, AB Capital is in focus. Macquarie has initiated coverage. They've initiated a buy with a target price of 230. AB Capital is now up almost about 3% And Adani Ports is what I'm looking at as well this morning. Citi has raised their target price on Adani Ports to 1758 from 1564 earlier, and that stock is up almost about 2.5%. As you started by saying, the market is not looking that bad at all. In fact, after a big rally we've seen in the last couple of days, just consolidating around this 22,400 level. Back to you.
All right, Sonia, thanks a lot for that. Well, Aditya Birla Capital, clearly that stock as well has got legs post that note coming from Macquarie. But the one that's really flying away from the Aditya Birla staple, that's ABFRL. The stock is locked with a gain of close to around 10%. It's been a big underperformer. But post this announcement that they're considering a vertical demerger of their businesses, the street likes it. It's an effort being made, course correction, whatever you would like to call it. Been a rank underperformer, but for the time being, massive volumes up 10%. Aditya Birla Capital, that's the other one, up close to 3%. In fact, NBCC, that's another one in there with a gain of close to around 4.5% as we speak. And that's moving on fairly good volumes. IndiGlobe Aviation is up close to around 2.5% as we speak. So from the F&O stocks, that's one of the top movers. India Mart, the stock's down 3.5%. I'm not sure whether there's any news flow, but that one is taking a hard knock. That stock is down close to around 3.5%. And Delta Corp yesterday had a big run. That one was, in fact, was flying away in trade. Today, in fact, it's pulled back close to around 2%. Yesterday, it was up more than 10% in trade. In terms of top volume movers, even today, a few more stocks. You have BEL. The stock is up close to around 2%. And South Indian Bank now down 4.5% odd. Prashant.
You know, Adani Power, Nigel, is the other one, right? Was up, actually, for the last 2 days, has been up 5% each. Adani Power is starting another 5% higher. That's got volumes as well. 1 million shares, actually. So very large volumes for this point in the day. Coming right there on the volume-led gainers list. ABFRL, IRDA, etc. We've mentioned NBCC, 5% higher, 131. Data Patterns is another one, which is up 6%. Stocks at about 27.20. There is HEG, which is up 5%, 2,056 on that one. Tata Investment Corporation is up about 5%. Stocks at 68.80 right now. There is Symphony, which is up about 5.75% higher, 920 on Symphony. Bajaj Consumer is another one, which is up about 6%. And Nuvama starts about 5% higher as well. So 48.60 on Nuvama. It's got volumes, but I go down the list, but things start to fade out a little bit. Transformers and Rectifiers had a large move. I mean, actually, in the last 5 days, it's had a pretty large move. So from 300 rupee levels, I mean, I think TRIL has moved up to about 430. Yeah, in about 6 or 7 days flat. So that's been a big flyaway kind of a move. On the way down, yesterday CG Power was down 5%. But it had a very large move, so just to pull back. PNB Housing, which saw a 13-14% rally yesterday, starts down 2.5%. So 730. Indus Tower had a very large move yesterday. That's down about 1.75%. Again, right there in terms of volumes. I think we mentioned South Indian Bank, which is down 5%. Is one of the top volume-led losers right now. And BDL, that's Bharat Dynamics, a mover on the upside. It's seeing a bit of a pullback. Other than that, I mean, not very much which is going on. 30 points lower on the Nifty, 22,428 is where we stand. Manish Sonthalia is with us, Chief Investment Officer, MK Investment Managers. Manish, good morning. Great to have you with us here. Thanks very much for your time. Just want to start by sort of, asking you about whether the ABFRL story can really turn with this demerger. Because, you've got a bit of a marker in the distance, which market knows, which is trend. Same space. I mean, it's not as if ABFR has got bad brands or anything. I mean, they've got some great brands under the stable. And now the market sees, the group making some efforts to maybe revitalize the story. Can this be a big wealth creator from here? It's very initial days. We'll have to see, what they plan to do and how they will do it, etc. But at least we've seen some action. Go on.
But then I'm not tracking ABFRL that closely, but what I can tell you in the business of retailing, it's unit economics which matters the most. And what matters is basically store level unit economics. And that should be more than your cost of capital. So ROC at the store level should be more than the cost of capital, and typically at 18-19%, if you're able to achieve that, I mean, you're going to have a winner. So I'm not so sure as to, what this demerger would mean in the case of ABFRL, but I mean, I would look at that metrics to understand whether they can achieve that. But beyond that, I really don't track ABFRL that closely, Prashant.
Okay, got it. Manish, thanks for that. Well, the market, the headline index may look flat, but don't be fooled by that because beneath the surface, there's so much action happening. Prashant was mentioning AB Fashion, which is up 10%. Look at other stocks, right? Adani Power is up about 5% right now. IRDA has come back in a big way. IRDA is, is still up almost about 50% this year already. So it's sort of gained a lot of traction. Then you have NBCC, Chola Finance, etc. So lots happening in the broader markets. Manish, hi, good morning. I wanted your thoughts on the two-wheeler space because you track this space closely. We are seeing signs of a big revival in the export market. So we're seeing it with Bajaj Auto, with TVS Motor. But the problem here is these stocks have rallied a lot. Do you see any incremental value?
So PVs and two-wheelers are likely to do better than CVs and tractors even in FY25, but the growth rates in FY25 over FY24 for two-wheelers and passenger vehicles is going to be slower. Now, the valuations have already run up. There is competition or let's say some sort of cannibalization that is going to happen from, let's say, electric two-wheelers, etc. FAME subsidies are also going away, slightly muted in FAME 3, then FAME 2. And in that backdrop, I would believe that auto performance in FY25 compared to FY24, and particularly with reference to two-wheelers and passenger vehicles, is going to be slightly muted. Because the valuation, will catch up with the earnings growth, which is going to be slower than what we've seen in FY24. So largely, the auto play in FY25 has played out. There is going to be some rundown impact of the, the elevated valuations that we have seen in FY24. And I think, what is more comforting is the ancillaries, because auto is a 12 lakh crore market. And obviously, if export starts to pick up and India becomes the hub of auto ancillary exports, I mean, that is one space which looks very exciting, whether it be, light manufacturers, LED manufacturers, it could be your battery management systems and a whole lot of tire companies, so on and so forth. So I think the OEs don't look that exciting, but ancillaries look much more promising.
Okay, all right. Hi, Manish. Good morning. Good to see you, Ben. How are you placed between the staples versus discretionary? discretionary stocks, they delivered great numbers and they got re-rated multifold. While the staples, well, the numbers weren't that great, but valuations seem pretty okay in comparison to what they've traded in the past. How are you all placed between them? Will you stick with the discretionary stocks, or do you think in an election year, you'd rather turn your attention to staples?
Nigel, for a larger picture, a broader picture, I think 2010 to 2020 was all about consumer stocks with or without earnings. There was P re-rating. 2020 to 2030 is all going to be about investment related. Of the three pillars of the economy, consumption, savings, and investments, 2010 to 20 was consumption and savings. 2020 to 30 is going to be savings and investments. So obviously, staples. In recent times, you would have seen that bulk of the raw material price increase has been absorbed. Companies have actually taken price increases to the extent they could, but volume growth is missing. And, valuations are not really that palatable even now. Yes, they have corrected. They have gone through time correction. Obviously, when, you had elevated valuations and earnings growth don't come, then valuation do tend to correct. So I think it is an underweight staples even now, and rural demand, you don't know how things are going to be given that monsoons are likely to be okay this year, but there is a La Nina, there's an El Nino and all of that. I think I'm more positive on urban discretionary consumption because that seems to be firing on all cylinders. And obviously it is all about per capita income. And we've seen that the earnings growth trajectory for consumer discretionary has been much better than staples. And even though volume growth is not there for staples, the margin performance, because they have taken price increases and earnings CAGR over the last 2-3 years has not been that disappointing. Whereas it is going all guns for consumer discretionary space. And I think post-elections, consumer discretionary, when there's increased capex and there's more money circulation in the economy, there's a accelerator, on the multiplier effect. All of that is going to mean that consumer discretionary is likely to outperform consumer staples in the next 1 year at least.
Okay. I wanted to ask you a slightly medium-term view on the market as well, Manish. Do you think we are staring at a pre-election rally? Because, there are a lot of events, right? Political events recently indicate that there is further strength that we're seeing with the NDA. And the one thing that the market likes is policy and economic continuity. I mean, that's a recipe for further market strength. So heading into election season, do you think this could be a one-way rally? And if yes, what is the best way to approach it?
Sonia, the valuations are very reasonable. If you assume 1150 sort of a EPS number on Nifty benchmark index for FY25, then at 22,500, you're broadly trading at 19.5, 20 times. That is not expensive at all. But most of the market participants have factored in a continuation of the present regime of the government. Now, can they be a future re-rating in the run-up to the elections? I mean, given the lot of uncertainties and a whole lot of things that is happening between now and the elections, you don't know. There is a case of a negative surprise if something happens that NDA doesn't come back to power. I mean, there can be a lot of negative surprise. But the positive re-rating of the market still the elections is somewhat over. You can't get a positive surprise now between now and election results on 4th of June. I think the next big surprise is only going to happen. Massive re-rating will happen on 5th of June or 4th of June onwards. Till that point in time, it's a wait and watch. And it's all about positioning your portfolio from the medium-term perspective, not the immediately next three months perspective. I think there's going to be a lot of volatility. This whole liquidity analysis, a lot of churn that is going to happen in the broader markets because of the liquidity factor coming into play. All of these things are going to keep the markets in check between now and elections results. But I think fundamentals are perfectly fine. We are building in something like 17-18% sort of an earnings growth for FY25. That's very good. And 20p on FY25 numbers is one peg. It's not expensive at all. But I think future re-rating will take time after the results.
Before the results, actually before the elections also, that's 19th when things kick off, Manish, we'll get the manifestos, right? And that should be, we'll get the manifestos from the BJP and the NDA probably, I think, in the next few days should have, right? Because 19th the polls start. Do you think that will give us some sense? I mean, if it's well detailed, what are going to be the big areas of focus? I mean, at least for the next couple of months, that's essentially what the market perhaps will latch on to, I think.
I think if the manifestos talk about major reforms coming in the third term of the NDA government, which is basically judicial reforms, UCC is well known that it is likely on the table. All of these things may actually trigger a big move, because the country actually needs serious judicial reforms given the pending cases in the courts, etc. But otherwise, I think everything else is known in media, through media, etc. What the present regime of the government is thinking about bringing changes in the country. But if they don't come back into power, then obviously a lot of negative surprises will hit you. And obviously, the manifesto of the opposition will come into picture. But that's how I would look at it. I would really think that if there is no major surprise in terms of manifesto, nothing really much will happen.
Okay, all right. Final question, Manish, before we let you go. What about cement? The last quarter hasn't been great because of pricing. They're struggling to push through pricing, but volumes are very, very good. I think the street is waiting by let the election get out of the way. The price increases will come about, and obviously the consumption of cement is going up itself. So how do you approach this space? Some of the stocks have seen a fair bit of correction, case in point being a Dalmia Bharat as well. That's down to around 2,000 rupees.
Imagine, when the capex cycle is in an upswing, the entire value chain will gain. And that would include raw materials. And obviously, cement is going to be one of the key raw materials that goes into capex. And volume growth is happening, but pricing is an issue because, capacity utilization in certain parts of the country are not that great. And there's a slowdown mode between now and election results. So I think pricing action will improve post-election results because capex will pick up, ordering, etc., will pick up post results, and I would believe that cement on correction looks like a great buy from the next 2-3 year point of view. As I said, that capex cycle, every aspect of the value chain will gain between now and let's say 6-7 years from now. So it's a buy on dips, I would think.
Okay, a buy on dips in the cement space. Got it. Thanks a lot for joining in. Appreciate your time here on CNBC-TV18. But let's talk about the auto sector. Bajaj Auto's numbers came just a while back and they looked very good. Total sales growth of 25% is what we've seen. The big up move has really come in the export sales, a 39% growth, and domestic sales are also up about 18%. Rakesh Sharma, the Executive Director at Bajaj Auto, joins us now to talk about that. Rakesh, hi, good morning and thanks for joining in. Last time when we spoke, you did mention to us that there is a recovery visible in the export market. Can you tell us a little bit about that? Currently, you're doing about little under 1.5 lakhs in terms of wholesale sales in the export market. How much can it pick up over the next couple of months? And what's the average that you can perhaps see over the next quarter?
Good morning, Sonia. The export recovery is very slow and steady. And I think we have bottomed the curve. But the climb back is going to be very, very gradual, largely because, some of the markets in Africa are still reeling under the impact of the devaluation, whilst the availability of currency in other parts of the world is progressively improving for trade. But the impact of devaluation is hurting large markets like Nigeria, Kenya, etc. Now, this is going to take time. These price increases, retail price increases are going to take time to get digested. And we expect Africa to be on a very, very gradual upswing. Whereas, ASEAN and Latin America are doing well. The recovery over there is pretty good. But South Asia, which is largely led by Bangladesh, is still very slow. So when you put all this together, we would still say the next few months would be a gradual recovery. And so don't look at the percentage comparison with last year because there is a base effect which is coming in. It is better to look at it sequentially.
Okay, that's fair enough. I mean, so you're saying that couple of markets, South Asia led by Bangladesh, is still very slow. There's this currency devaluation issue in Africa, which continues to hit. Any kind of estimate on what FY25 could look like, particularly for exports? If we do see a slow and steady recovery, are you looking at a single-digit growth, double-digit growth in the export market in FY25?
It's difficult to hazard a guess, as you can understand, with all the kind of factors which are in play. But I would certainly venture out and say that it will be, we are planning for it to be next year or this year to be better than the previous year. But, having said that, one thing which I want to point out in exports is if you look at the value growth, there is a value growth. There is no value decline because the parts of the business which are growing, which is Latin America, have a very rich mix of higher value products. So partly because of the gentle devaluation and partly because of the mix effect, the value growth of exports is actually in positive. And whilst the volume, as you know, is negative. And if I sort of delve into that a little bit more, our flagship brand has grown by 25%, more than 25% in exports. So that has had a very good impact on both the value and, of course, the bottom line for the exports BU.
Mr. Sharma, hi, good morning. Prashant here, and congratulations on a sort of good number there. And as you said, on the export side, I mean, the climb back perhaps will be a little slow because of problems in specific African markets, etc. Just wanted to sort of ask you about on the electric side, on the EV side, on the two-wheeler front, could you give us a sense of, where do you, at the end of March, what's your market share, fourth quarter market share? And on a related point, I was reading, I think this was a note from one of the analysts who tracks your company, saying that, the Ola, which is which has been the leader in the EV side, on the EV side, has gained market share quite substantially over the last couple of quarters. And they believe it's largely led by a massive jump in distribution. I mean, their products are well distributed, whereas you and others have not really pushed on distribution yet. So it's a matter of availability in that sense. So just wanted your thoughts there, Mr. Sharma.
Yeah. Our performance, if I take the latest numbers, which have just sort of rolled in, and these are basis Vahan registrations, so these are not billing numbers. We are in the number 3 position with, I think, a 13 to 14% market share, which is a very significant change from last year when we were at this time at 5% and at a number 6 position. We have renovated, refurbished our Chetak range just in the last quarter, January, February, March, and we are going to add to it. So that has driven some of this increase. Now, when it comes to the industry, of course, always distribution plays a key role, but I think most of the major players are pretty well distributed. The swings which we see in market share in some competitors is largely attributed to pricing changes, And if you track the price movements over the last few months, and when I say price movements, it could also mean the introduction of cheaper, newer products. I think on the balance, what has driven shares is really a very high price-led initiative rather than distribution. The EV is such a compelling proposition that if I have, let's say, 5 stores in Bombay, people will go to those 5 stores. Just by having 50 stores in Bombay is not going to suddenly change the fortunes dramatically. So distribution also, there is a certain optimum level of distribution so that, the channel is healthy and channel is motivated and the channel is sort of investing behind the business. So I would say that it is really the attacking the lower segment price-wise and to some extent distribution.
Hi, Mr. Sharma. Good morning, and good to hear your commentary. You're sounding a little bit optimistic, both on the exports as well as on EV. And I recall last year you said every quarter will see an increasing improvement, and that's what's happened on exports. So good on you. What about Triumph? How are sales shaping up as of now? What's the run rate, and where do you see that number headed?
So Triumph overall, this month we've clocked about over 6,000 units. There has been a good uptick in exports. Many markets are now receiving the bikes made out of here. So that's about over 4,000 units and about 2,000 plus units, 2,100 units of sales in India, retail sales I'm talking about. And this would be in about 30, 40 cities. So it's a very steady progress. It's a new brand. We are now building, as we are expanding the network, we are building the brand position. We are putting in place programs which will not just lift brand awareness, but will differentiate the brand and will give an experience to a customer who's entering the Triumph world. And that is the kind of capability which we want to build over this year, so that as we introduce more and more products and as we expand distribution, the brand awareness and the brand differentiation and the brand equity will drive the market shares.
So from 6,000 units, how do you see this number shape up?
Certainly, we would definitely look at very high double-digit growth. It depends a lot on the pace of our expansion of our distribution. And we are, at this point of time, again, going quarter by quarter and ensuring that quarter one, which is this quarter, will be at least 30% better than the previous quarter.
Okay, I have a couple of more questions on EVs. Yeah. Sure, I have a couple of more questions on EVs, but before that, just overall on the domestic growth, it's been very strong. You're clocking about 2.2 lakhs on an average, and this time it's an 18% growth. What do you think you can do by the end of FY25? You gave us an outlook on exports, but particularly in the domestic market, any qualitative or quantitative, trends?
Yeah. So I think what we are anticipating, the domestic motorcycles market is to grow at about 7%, though I would say that, the March retails have been a little bit under expectations. We were expecting a similar kind of a growth, 7% for the industry in March, but it has come out at about, very low single digits. We are outpacing the industry. We have, in Q4, grown at twice the rate of industry. And if you look at our area of strategic focus, which is the top half of the industry, there we are even clocking 3 times growth. Now, the significant point over here, I think in this year, the significant point, which is from our point of view, which has occurred, is the substantive competitive position shift which has taken place. The top half of the industry, that is 125cc and above, that is growing faster than the bottom half. So its share of volume is around 50-51% now. Of course, its volume share and profit share is higher than 51%. In this, we were like 10 percentage points behind the market leader. And over the year, we have closed the gap to about only 2 percentage points behind. So our market share in the top half of the industry, which includes everything from 125cc to 500cc, is now standing at about 26% in retail terms. And this has all been driven by a slew of new products. We've launched 9 models in the Pulsar range. We've launched 6 models in the KTM and the Triumph range. And we are set to continue this breathtaking pace of new product launches well into the next quarter. And therefore, we that if the industry behaves in the same way, we are set to look at claiming leadership in the top half of the industry.
Okay, that's very optimistic. I wanted to talk a little bit about EVs because Chetak did very well in the month of March. They sold record units. The industry itself did very well, but now April onwards, or rather, July onwards, suppose the FAME subsidies are pulled out entirely, then how do you see the way forward for the entire EV sector? Just trying to understand any low-cost EV that could be in the making for Bajaj.
Yeah, so of course, the beginning April, the subsidy has already been announced by the government to be half of what it was when it comes. So that reduction is taking place. And that's why you see a very strong blip for the industry in March. I expect that April will be low, but when you put March and April, May together, we will come to the average level which we have been seeing in January, February. The penetration levels obviously slow down when the prices increase, net or effective prices to the customers increase. But the customer is pretty switched on to the prospect of EV. So that more than anything else is going to continue to drive penetration, albeit at a lower rate. We expect, a growth of 20 to 25% over the year. The other thing which is happening is, of course, we know that the battery prices are coming down and the cell costs are coming down, as a result of which it gives us a little bit more room to have better pricing to mitigate the withdrawal of the subsidy to the customer. And therefore, I would say, yeah, about 20-25% growth rate through the year can be expected. And certainly, the focus of the industry will probably now move more towards lower priced products or that kind of a segment, rather than very performance oriented and probably go more towards the value products, which will also drive the industry. We have got a strong pipeline, and you will see within this quarter some introductions from us, which will carry our market position even further.
Got it, got it. Just one final question on the three-wheeler EV ramp-up. What was the number in March, and how do you expect to ramp it up in this fiscal, in the new fiscal?
So EV three-wheelers, as you know, we launched 3 products. We are in about 20 cities or so. Our overall market share, despite just being in 20 cities, and EV in three-wheelers has a very long tail. It is there in many towns, and that is where the distribution effect will certainly come into play. But where we are, those 20, 30 towns where we are already present for a couple of months, we are clocking very good, 30 to 50% market share. We've got a very aggressive plan because the product is now proven, product acceptance is proven. We are getting a very good demand from our dealers. We've had a national launch, and the channel is the appetite is whetted. And we will be entering about 200 towns in the next 6 months and driving for leadership at least 50% by, in this year.
All right, Mr. Sharma, we'll let you go on that note. Thank you actually for joining us and, talking about the entire business in depth, and your optimism is actually palpable and perhaps infectious as well. You're seeing that big move in the stock this morning, and the stock is now at the high point, up almost about 2%, and it's had a phenomenal run. I mean, if you just pull up a one-year chart of Bajaj Auto, it's had a dream run. In the last 1 month itself, it's given you a 15% return, and more in the last 1 year. But here's a quick programming note. CNBC-TV18 presents India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market. Don't miss out on this. Tune in to CNBC-TV18 on April 4th, 5:30 p.m. onwards.
Welcome back. This is Corporate Radar. As promised, let's get straight to our next corporate that's joining on the show. That's Vinati Organics. And remember, the Ministry of Finance has imposed anti-dumping duty on para-tertiary butyl phenol last month. To discuss the impact of this on the company and how's demand as well, we're joined by Ms. Vinati Mutrija, the MD of the company. Hi, Vinati. Good morning and good to have you at the start of this fiscal. Well, tell us, how does this duty that's been imposed impact you all, and how much as a percentage of sales do you all get from this particular product?
Sure. Good morning. Thanks for having me. So the impact of this duty is actually not very significant because PTBP product as a whole is not a very large product in our portfolio. For example, butyl phenols, which comprises of four products, that itself is, say, about 15-20% of my sales mix, and PTBP is half of that. Now, again, half of the PTBP is exported. Also, on that, the duty doesn't apply. So it's really applicable on the domestic sales of PTBP. If you were to ask me to monetize this impact on an annual basis, it would be somewhere around 4 crores or 5 crores in a year. And that's really it.
Okay, all right. So let's move on then. Let's talk about business on the whole. How has demand been in quarter 4? Has there been some improvement from quarter 3? And if you would give us a rough guidance about FY25, how do you see things shaping up?
Yes, absolutely. Quarter 4, we are seeing a recovery of the destocking. It seems like the stocks are over and customers are buying more, ordering more. We do expect this fiscal FY25 to be at least 20-25% higher than the previous fiscal.
This is Vinati. Hi, morning. This is top line, 20-25% higher. Vinati, hi, morning. If you can hear me, you said, okay, I think we lost that. It's frozen. So we'll just connect Vinati back with us and adjust a bit from now. And
but there's a big move, Prashant, in the broader markets. Just want to mention that the mid-cap index is now up almost 300 points and big moves coming in. I mean, look at something like a data patterns. It's up 9%. And I also wanted to make a special mention to what's happening with HDFC Bank. Now, remember, the FI ownership data for HDFC will be out in a few days' time. And there is a possibility of the MSCI weights going up and perhaps triggering an inflow of almost $2 billion into the stock. That's what the market is talking about. So single-handedly, HDFC Bank has now pulled up the market in the last 10-15 odd minutes and made sure that the market stays around the 22,500 mark. So big moves coming in there.
Just some caution to this number of $1.5 to $2 billion odd, because there are various alternate notes that have come out. So some are also saying that you'll require the FI ownership to come down by 3 to 4% to see this $1.5 to $2 billion odd. So for the time being, the street is bidding up the stock in anticipation that MSCI weightage will be increased. But we'll have to wait for the shareholding pattern, which should be out in the next few days. And once they're out, then you'll be able to estimate what kind of flows they're coming in. But if it's 3 to 4% reduction of FI ownership in the company, then we'll be going with that number of around $1.5 to $2 billion odd.
Just a few other names here which are moving. By the way, ABFRL continues to be the highlight of the session so far, right? So had a bit of a swing, by the way. Was opened at 232, then made a high of 243, sold off back to about 230, and is back at about 238. So, it's been swinging, but volumes by far, much higher, much higher than the number 2 or the number 3 gainer, volume-led gainer. So data patterns and IRDA are the number 2 and number 3 in that sense, volume-led gainers list. Just a few other names which have joined here. Symphony is up about 8%. So was not there in the mix in the morning, 935. There is TCNS brands. I mean, we're talking about retail and branded apparels, etc. TCNS brands is up 12%, almost at 400 on the stock. Again, very large volumes coming through at this point. There is EPAC, which is up about 7%. It's got decently large volumes, and Schneider is another one which is up about 5% or so. So just some new names here, really. With what's happening. I mean, we were talking about HDFC Bank on the upside. Look at ICICI Bank. It's actually going the other way. ICICI Bank is down about 1.5%, and that's at about 1,082 That is ICICI. Indus Tower, I was mentioning this in the morning. Actually, some of these are just big rallies from yesterday which are reversing. So Indus is one, Idea is another. Idea was up about 6% yesterday. That's down 1 right now. South Indian Bank is down about 4.5%. PNB Housing was a big mover yesterday. So these are just kind of moves on the other side after sharp rallies just in the recent past.
Also, this entire travel and tourism theme, right, once again picking up today. So you have Interglobe Aviation, which is at a fresh high this morning. You have EIH, which is at a fresh high as well, fresh 52-week high, and a couple of other stocks as well. But I think Vinti is back with us. Vinti, sorry, we couldn't hear you at that time, so I think there was some issue with your video. But I wanted to ask you a little bit, first of all, of course, complete what you were saying earlier, and also wanted your thoughts on how the export markets are shaping up, because there were some challenges over there. But what is the way forward now?
Sure. As I was speaking, we are seeing a very good recovery in demand for most of our products. The destocking seems to be over. Customers are sitting on very little or zero inventory, and hence the reordering has picked up. So Q4, we've seen that trend from Q4, and we expect FY25 to be 20-25% higher than FY24. And this mostly is coming from the export market. Domestic as well, we are seeing demand shaping up quite strongly, and our products, the new products, antioxidants, are getting approval in with more customers, and hence there's good traction across products.
Vinati, hi. So 20-25% higher top line growth in 25 over 24 is what we should expect, right?
That's right.
Could you guide us on broadly what kind of margin outlook you see for FY25? Are costs higher still because of this entire Red Sea issue? There's this sort of bridge collapse in Baltimore. Many have pointed out for certain products, maybe I think largely autos, etc., because that was a crucial link to the port. There was an issue. I'm not sure if that has any impact for your business. I mean, broadly on margins and costs.
Sure. So we have mostly a pass-through formula type, basis for most of our products, and I expect the EBITDA margins to remain similar as FY24, and you can expect a same level of growth of about 20-25% in bottom line, similar in line with top line.
On the export market, I just wanted to understand, because of the Red Sea issue and now the Baltimore issue as well, how much higher are costs compared to what they were, say, 5-6 quarters ago? I mean, is there a big impact that you're seeing?
Well, freights to the US or Europe have doubled from all-time lows. But then again, we have seen much highs during COVID. So it's still not gone up to those levels. It's still, say, 1/4 of that or 30% of that. So it's being transferred, and most customers are absorbing that cost.
All right, and you're saying margins will be similar to what we have seen in this year, so it should be in that vicinity of around 26% odd?
That's absolutely right, around 26-27%.
Got it. In FY25, what kind of a capex plan have you laid out, and which are the capacities that will come on stream?
Sure. So we are expanding. We are adding a new line for ATBS. That's about a 300 crore investment, and that will be complete by, say, December 24. We have almost commercialized, or rather started trial production in VOPL, which is our subsidiary, where we have new products, new niche products like MEHQ, Glycol, and a few Anazole, and a few others. But they will also start in batches. Some of the other products like Anazole, 4-methoxyacetophenone will start around October. We will also be adding a couple more antioxidants to our portfolio next year. And we are contemplating an expansion in butyl phenol as well, as the demand has picked up.
All right, Vinti, we'll leave it at that. Thanks a lot for joining us and speaking to us about the business. Well, for the market, by the way, although the headline index is flat, like we were saying earlier, there's so much action beneath the surface. The mid-cap index is now up almost 200 points. When we come back, we'll also try and get you an update on what's happening in the commodity markets. Manisha Gupta will be with us. Welcome back. If you've just joined in, then the market is very quiet this morning, but there are plenty of stocks which are moving around. Many stocks hitting fresh 52-week highs today. Adani Ports is at a fresh 52-week high. The defense space continues to charge ahead. BEL is at a fresh 52-week high as well. Voltas, you have something like in HEG, Hindustan Aeronautics has been winning, orders day after day. So Hindustan Aeronautics as well at a fresh 52-week high. And something like an SRF, which has been the erstwhile darling of the market, once again coming back into action. SRF is up in the green, up about 1.5%. But let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is here to give us more. Manisha, over to you.
Well, thank you so much for that, Sonia. Many commodities are doing quite well as we start the second quarter of this calendar year. But I want to focus on aluminum right now because we are trading at a 3-month highs onto this one as well. We have witnessed positive manufacturing and factory activity data come in from US and China. That has been supportive. In any case, China bauxite security uncertainty is something that has been keeping prices supportive for the last couple of months now. The dependency on Guinea is quite strong, and there has been a fire and an explosion in a facility there, and that has led to premium coming in for the prices. Apart from that, the demand also seems quite on the stronger side. On ground there, we've seen deliverable aluminum continue to slip out of inventories there. If you look at Yunnan smelters, they also are curbing production right now because of a drought-like situation there. And the markets also are looking at Japanese buying, which has picked up. Japan actually is paying $145 a ton of a premium to buy aluminum. So those are some of the factors which are keeping the prices on the higher side. Talk about India, and we have seen India as the second largest aluminum production and the third largest consumer globally as well. Indian demand is strong on Make in India, green energy and EV, and that is where aluminum is seen in sense of demand there. Also, when you look at the alumina production for 2023, India has climbed up the ranks there and stands tall at number 5. Of course, far behind from where China is at 82 million tons of a production of alumina. India stands at 7.3, behind Australia and Brazil as well. So when you look at the consumption numbers as well, there are conversations that in next decade, you could be looking at aluminum demand doubling in India. At this point in time, it's 12 kg per capita global. China is huge at 31.7 kgs, while India stands at 4.5 kgs, with reports suggesting that by 2033, you could be looking at 9 kgs per capita consumption of aluminum in the country. Take a look at the prices, and that's the last plate really, where we have seen aluminum prices continue to gain up 2.5% up in the last 1 week. And for the last month, we've seen 5.5% of a jump up coming in for aluminum. And various reports do suggest that the aluminum prices could actually be an outperformer within the space in the next 1 month.
All right, Manisha, thanks a lot for that. Well, a few stocks actually from the broader markets that are moving up. We'll take a look at Voltas. Voltas is flying away. We're bracing ourselves for scorching heat. And you have all these stocks that are doing quite well. Voltas has been a relative underperformer, both on margins as well as on market share. And for the time being, seeing a big relief rally up close to around 5% odd. Sachitanand Utekar of Trade Bull joins us to help us out with some charting trends. Hi, Sachi. Good morning. Good to see you win. Well, run us through your top pick then.
Good morning, Nigel. Nigel, have shared 3 exhibits here. When it comes to Nifty, we are of the opinion that there could be a gradual up move, and this level of around 22,500 may be a bit challenging, but gradually we may see a swing towards 22,730. This is something that has been depicted by the rising channel formation on the weekly scale, and that's why we believe that the support base at 22,000 may hold for this particular series. When it comes to top picks, I think the data of Nifty financials is very interesting. In fact, if you look at the monthly structure and the weekly structure of Nifty Finance, we have already seen a good classic breakout from a cup and handle formation on its weekly scale. And after this particular breakout, the trend has been very steady, and it has been on the bullish side. So even here, I think there could be a good, strong outperformance. The channel in which this particular index is oscillating has an upper bound placed somewhere close to around 23,000, and we expect that that particular level may be achieved in a couple of months. So I think the floor is very well set at 20,500, and we have seen a good classic V-shaped recovery here, and we believe that this particular momentum may continue in this particular series, and that's why our top pick from this particular pack is Bajaj Finserv. Disclosure that we have also communicated the same to our clients. Now, if you look at the monthly structure of Bajaj Finserv, clearly, from 2021 October, we have seen a kind of a triangular formation on its monthly scale. Now the price is oscillating near the apex zone, wherein a breakout is anticipated above that 1700 mark. If you look at the latest base which was formed at around 1530, this base again looks very confident. This is the same level wherein its 20-month exponential moving average support is also placed. So probably we may see a good strong follow-through action in this particular counter. The moment it starts trending above 1700, the trajectory is quite clear towards 2160. So from a long-term perspective, I think it's a good time to accumulate this counter. The stop loss should be placed at around 1530 on a weekly closing basis. And we may see some strong momentum play towards 1740, 1760 during this series itself.
Sachidanand, any other ideas like Bajaj Finserv?
SRF is one particular counter which is interesting. In fact, even this particular counter has exhibited a very strong breakout play. Now, for the last 3 years, the stock was facing a lot of resistance at around 2600 mark, and the way the expiry data, the rollover data was, it was indicating that probably this is the time wherein this oscillating range of 2600, 2200 may be breached. So I think this is one interesting sequence that we have identified, and even here the pattern is indicating a price target somewhere close to around 3000. So I think even here chasing momentum should be fruitful. The way it has surpassed that 2600 mark, probably the stop loss should be kept somewhere close to around 2570 on a closing basis, and even at this juncture some momentum longs can be considered.
Okay, thanks a lot for that, Sachidanand. Have a good day. Well, that's the word coming in from Trade Bulls. Let's go across to Upasna. She's tracking AB Fashion this morning. Upasna, over to you. It's been the big mover today.
Well, AB Fashion will remain in focus today as the board has authorized management to evaluate potential demerger of ABFRL into two separate listed companies, that is Madura Fashion and Lifestyle Businesses and the remaining ABFRL. Now, coming to Madura Fashion Lifestyle Businesses, it includes 4 lifestyle brands, which is a casual wear brand, Reebok and innerwear brands, and it accounts for almost 60 and 75% of ABFRL's 9-month FY24 revenue and EBITDA. And in terms of the numbers look stable, margins and even cash generation is positive in this counter. Now, coming to the growth business under ABFRL, post the merger, the remaining ABFRL will be focused on high growth segment is what the company has indicated, and it will include brands like Pantaloons, Ethnic Portfolio and TMRW. High growth segments with large addressable markets, but still in investment phase is what the company has said. All ABFRL shareholders would have identical shareholding in the newly formed entity, and after the completion of demerger, ABFRL to raise growth capital within 12 months is what the company has said. Well, demerger to enable creation of two separately listed entities as independent growth engine is what the company has said. Hence, this counter will remain in focus today.
All right, that's a very large move now. I mean, we're at back at the day's highest point on ABFRL after a bit of a swing. I mean, not a bit of a swing, almost a 15 rupee swing on ABFRL because we hit 243-ish kind of levels earlier. Then the stock sold off to about 230. And this is, I mean, the second coming today already. And we've, of course, been trading only for just about an hour or so. So quite something. By the way, the market's down about 30 points. We're at about 22,430 at this point. AB Capital, I mean, you're talking about Aditya Birla group companies. AB Capital is the other one, which is up about 5% as well. Of course, I mean, from that group, yesterday we had Vodafone, which of course rallied hard in trade. So, otherwise it's a pretty decent kind of a day for the broader market breadth. I think there's a good time with an hour past to look at that. 1,800 stocks are higher, and you got about 550 stocks on my screen, which are lower. So this is a very healthy over 3:1 advanced decline ratio. Which we have, and it's pretty clear which way the broader market is, what it wants to do. A few other names. MTAR Tech is up about 7%. So these are just new names. IRB is sort of rallied to about being up 5% now, 64. There is something like a HG Infra, which is up 5%. Varroc is up 5%. I highlighted TCNS brands from the retail space, which was up 10, it's up 15, 16% now. So that's another one which is sort of rallying hard again compared to, of course, the leader. It's much smaller business, but it's been a very large underperformer as well. So some of these names are rallying pretty sharp.
I just wanted to make one mention on something outside the market. We're seeing a big pickup in the luxury market, right? I mean, Audi just came out with its data, Audi India, and they've seen a 33% growth overall in the fiscal in terms of sales, right? And they've said that Audi Approved, which is their premium segment, has seen a growth of, which is Audi Plus, which has seen a growth of 50% in FY24. So they have supply constraints. Despite that, demand is so strong. And we've seen a lot of these premium developers as well do pretty well in the real estate market. So just wanted to mention that the luxury market is picking up in a big way. But here's a quick programming note. CNBC-TV18 presents India Exchange, where market experts and industry stalwarts will collaborate in insightful discussions on India's economic path and the evolving dynamics of the Indian market. Don't miss out on this. Tune in to CNBC-TV18 on April 4th, 5:30 p.m. onwards.
The RBI's Monetary Policy Committee's April 5th to 7th meeting is happening in a context when India's growth is strong and the US economy, the Pied Piper of the world economy, is also growing strong. So how should the Reserve Bank move on rates and on guidance? As always, CNBC-TV18 Citizens Monetary Policy Committee meets ahead of the RBI MPC to discuss the issues that will confront the RBI. I have with me the chairman of our committee, Dr. Pranab Sen, and members Samiran Chakrabarti, Soumyakanti Ghosh, Sajid Chenoy, and Sonal Verma. Gentlemen and Sonal, thank you very much indeed for your time. Well, let me start with Sonal this time. Sonal, well, as I was just saying, the Indian growth seems to be strong. The US Federal Reserve has bumped up its growth forecast for 2024 from 1.4 to a whopping 2.1%. So how should the Reserve Bank guide on growth? Will they also push up their forecasts?
Yeah, Lata, our view is it'll be a similar story in India as well. First off, actually FY24 itself is ending on a strong note. So vis-a-vis the 7.6% advanced estimate, the current estimates that most are talking about, including the RBI, seem to be closer to 8%. So that sets us up on a strong base. For FY25, back in Feb, the RBI had projected a growth of 7%. Our sense is they will upgrade this number to potentially something around 7.2%, although in the latest bulletin, the models that they run actually have an even higher forecast of 7.4. But really, it does look like, yes, we will likely see an upward revision in India as well. And for the RBI in particular, I think they are seeing signs of private capex picking up. Global growth has been strong. Inflation in India is expected to come down, which should be positive for consumption. So on net, yes, more optimism on growth is what we expect. From our own perspective, though, our FY25 projections are closer to 6.5%. So on our side, we think the model code of conduct will mean some moderation in public capex in the first half of FY25. The private capex, we think, is not yet broad-based. And finally, I think on the consumer side, the various tightening of macroprudential norms that the RBI has announced, we think will lead to some moderation in credit growth in FY25.
Okay, Sonal, got that. Samiran, actually, let me toss the same growth question to you. Do you think growth is as strong as the Reserve Bank is making it out to be in the bulletin? And if it is, then should not the Reserve Bank sound hawkish?
So, Lata, 2-3 different ways to look at it. One is that there is this difference between growth as estimated through the GDP method versus the GVA method. As we know that there is, in this current point, a big divergence between the GDP and the GVA numbers. Our suspicion is that the RBI is going to talk more in terms of GDP rather than GVA, but we have to keep in mind the softness in GVA when we look at growth. The second issue is that this is also a growth which is somewhat two-paced, because the investment growth is much stronger than the consumption growth. And in our analysis, we find that this could have a significant bearing on overall inflation. Historically, the output gap is not that much correlated with core inflation, but it is quite well correlated. Core inflation is quite well correlated with the consumption side of the economy. If consumption growth is what is driving the higher output gap, then there is a chance that core inflation can also pick up. But that's not the case this time around. So there is not much to be worried about the higher growth as of now. And the last point is that ultimately we have to also take a call on where India's potential growth stands. If, because of all these supply side measures taken by the government, the potential growth itself has come up, then maybe the output gap is not as wide as it seems to be from the last 3 quarters GDP print. So because of these 3 reasons, I think RBI is likely to underplay the potential impact of higher growth onto inflation, and can sound somewhat more comfortable that they've achieved both the things of high growth and low inflation on a more sustained basis.
Okay, then that should impact the stance, but I will come to that in just a bit. Let me first get all the issues on the table. Sajid, what should the Reserve Bank and the MPC take away from what the Fed has just said?
Yes, that I think, the first blush, the sense was the Fed was dovish because it had marked up its growth numbers, it had marked up its inflation forecast, and yet it had persevered with 3 rate cuts this year, though that was a narrow majority. So the first reaction, it was dovish, and kind of markets reacted accordingly. But if you dig deeper, there are various cross currents that are worrying. First is the data is really not cooperating with the Fed. Right? There was the disinflation in core towards the end of 2023 that got everyone excited. But if you look at the last 3 months in the US, for example, the quarterly annualized momentum of core inflation is above 4%. And that's not going to keep the Fed comfortable. Now, this is no surprise because, as we've discussed before, much of the core disinflation last year was because of goods. Goods were in deflation, a lot of it being exported by China. Right? It was services inflation that was sticky. We're now in a situation where we've passed the trough of goods deflation. Goods prices are inching back up. Services remain sticky, and therefore core inflation is, uncomfortably high. So even though the Fed wants to ease, we may get a much shallower cycle from the Fed because if core inflation settles at 3%, which is above the 2% target. The second known unknown for the Fed is just the neutral rate. What is the medium-term rate? We saw the Fed move up the medium-term rate. And there's an increasing view here that long-run rates in the US may not be 2.5%, which is what everybody thought a year ago. They may well be closer to 4% because balance sheets are much stronger. Fiscal policy is more expansive post-pandemic. And all this would argue for a higher neutral rate. And if you look at it that way, it's no surprise that despite policy rates being at 5.5%, the US economy has not gone into recession. the US economy has not collapsed. In fact, it continues to be very resilient, because if in fact neutral rates are 4%, reflecting healthier fundamentals, then in fact monetary policy is not as restrictive as was presumed through all of 2023. In other words, again, there's less space for the Fed to cut. So while the Fed did seem dovish, the data is not cooperating. We may get a much more shallower cycle. And I'll end by saying that the global environment is a little less benign than a few months ago. The US is growing very strongly. Europe is still expected to grow less than 0.5% this year. So if you get continued US exceptionalism, you will get a stronger dollar, which will weigh on emerging market currencies. And finally, we've seen crude back up in the high 80s, right? So the environment now is where emerging markets have to potentially brace for a shallow easing cycle by the Fed, a stronger dollar potentially, and crude in the high 80s or low 90s.
Okay, I think I'll have, if I have time, I'll come back to the neutral rate on India as well to you, Sajid. But first, inflation. Soumya, core is really undershot, 3.3%, and the Reserve Bank had once said that that's where they will really pay attention. And chances are we are going to have a La Nina this year after an El Nino last year. So do you think the Reserve can guide lower on inflation?
Yeah, thank you, Lata. I think that on the inflation front, the story looks more comfortable, and of course the trajectory looks benign as per the trend is concerned throughout the next till the end of next fiscal. Most possibly the deflation in core, which has could continue a little while longer, and also the fact that if you actually look into the inflation trajectory of the RBI projections, I think the numbers could touch closer to 3% by July 2024. So, but the point to note over here is that there are, of course, statistical impact base effects are concerned. So if you take a longer period of time, inflation next year looks remarkably anchored in the range of 4 to 5%. So given this fact, and given the fact that the central bank has an inflation average of around 4.5%, which is not markedly different from the market forecast, I think that could give a lot of comfort to the central bank, but the most important point, I think, which Shamiran also pointed out, I think the relationship of the core inflation with the growth numbers. I think the deflation in core has actually surprised everyone. And if that continues, if the deflation in core continues, core is possibly supposed to get back into 4% after a couple of months. But even if it gets back to 4%, given the fact that we had a narrative of stickiness in core, I think that has surprised many. And possibly it will be important to understand whether the deflation in core will continue for a while, because that will give the RBI a lot of breathing space in terms of the overall reading of the inflation numbers.
Okay, well, let me toss this the inflation question to Dr. Sen as well. Dr. Sen, you're the former statistician, and we've just got this household consumption expenditure survey, which clearly indicates that the quantum of food that is there in the CPI needs to be brought down. Cereals need to be brought down, and those are the inflationary elements. So if all this is going to come into the CPI and point towards a lower CPI, how should the Reserve Bank and the MPC look at the inflation picture?
As far as inflation is concerned, there are conflicting sort of effects of the new household consumption survey. So on one hand, food as a whole comes down. So that would reduce at least the volatility in the inflation numbers. But within the food group, what you find is that cereals, which is probably the most stable of the food items, has come down very significantly, and non-cereals, which is fruits and vegetables and so on, that has gone up significantly. So you've got two conflicting. Now, because of that, and because volatility is much higher in the non-cereal component, food component, you're really not out of the woods yet in terms of the food price-driven volatility in inflation. So I wouldn't be breathing a sigh of relief saying that, this whole food business is behind us. It isn't.
Okay. Well, I was hoping that one of you will say that they may guide inflation lower. But okay, not just yet, maybe. Thank you very much, members of the Citizens Monetary Policy Committee, for your deliberation.